India's potential growth rate, as you know, is about 6.5% to 7%. So we are growing at 4.5%, 5% in the last 2 quarters. And going forward also, it's clear that the recovery is going to be shallow. So it's not like, growth would jump back to 6.5% anytime soon. So probably this year at best, we will achieve 5% average growth, which is going to come down from 6.8, which is not good at all. A few positive things, what I saw in the details, is that private consumption growth, which was 3% YOY in the previous quarter, has improved to 5.1%. It's still much lower than that 7-8% that we used to have, but at least there has been some traction. But the bad news is that investment growth has fallen to about 1% YOY, which is very, very low, and so that's a source of concern. Now, obviously, government consumption helped a lot. Government has been front-loading expenditure in July, September. My guess is that they'll do the same in October, December as well. So probably October, December GDP, again, you'll get in the range of 4.5% to 5%. And then January, March, when there's a positive base, and then the next few quarters when there's a positive base, you'd see some traction. Nominal GDP growth at 6% is a big worry, because what will happen is your debt GDP will start, flattening out and then probably increase as well. So we are already at 69-70% debt GDP. So people who are advocating fiscal deficit to be, allowed to go up should be taking that into consideration as well.
All right, Kaushik, I'll come to some of these individual points in a minute. Let me go across to Rahul. Rahul, your thoughts? You're focusing on GDP ex government as well, as one should, given the sharp increase in government expenditure this quarter.
Yeah, so this particular quarter, we saw the government GDP ex-government and ex-farm sector decline to about 3.2%. Now, this is the weakest number in almost a decade. It was quite clear that the private sector, both from a consumption and from an investment perspective, was showing signs of a lot of stress, and that's kind of come through in the numbers. Having said that, we do see some signs of aggregate demand starting to stabilize. Our sense is that the third quarter and the fourth quarter numbers for the fiscal year are going to be marginally better, and you will see even sequentially growth is starting to show some signs of improvement. So I would say this particular print was reasonably well telegraphed. Market was expecting a poor print, and we have not had a very shocking outcome. So being close to consensus is a good outcome. In that particular regards, it would be interesting to see what's the trajectory of growth that the RBI lays out for next week, and that probably will give a lot of cue to the market about the scope for further policy support, both from a monetary and from a fiscal perspective.
All right, and I'll get to that in a minute. Siddharth, this issue of meeting expectations is a fabulous thing, right? I mean, yes, at 4.5, we met expectations, but this is now the 6th quarter of decline, and we've come off growth rates starting at 8%, a little above 8%, and we're at 4.5 now.
Indeed, it's clearly stunning. 5 quarters back, growth number was at around 8%. Today, it's at around 4.5%. But it is still, I think, the way you mentioned rightly, I think it makes a lot of sense also that this is, if you see in the last 2 quarters, there had been significant and sizable disappointment in terms of expectation and actual outcome. I think at this moment, given that the 4.5% number which we are seeing today is in line with market expectation, is also one important factor that at this moment the actual prints are getting better aligned with the high frequency indicators. To that extent, it's positive. The other factor is that there was a big negative in the last quarterly print when the consumption, private final consumption expenditure growth rate, which is very clearly the mainstay of growth in case of the Indian economy, had registered a sharp fall from the usual 7% odd handle to a much lower number. It seems to be the case that that particular number is stabilizing at a slightly better or slightly more respectable zone, still a bit weak, but it's stabilizing at a slightly better number, better zone, which is a clear positive.